Hello there.
Black Friday has come and gone, although these years, rather than Black Friday, it seems like Black Fry Week. It just goes on forever. Not that I'm complaining, we got all the bargains, of course. And that means shopping, and that means good things for stocks like Shopify. The only thing it can compete with is Christmas carols, blaring them out in the stores and at home. And so Shopify is going to be competing with Spotify. That's right, this week it's S for stocks. Welcome to episode 15. Let's see how our portfolios are doing, battle some stocks against each other. This is episode 15. I'm the Gentleman Investor. Let's invest. As always, we're going to reveal who won last week's battle. We're going to get a portfolio update, and we're going to battle two more stocks against each other. Without further delay, let's get underway. Last week's winner was Mondelez. I'm really looking forward to this, seeing how this stock performs over the next few weeks, months, and years. Right, let's take a look at how our portfolios have performed this last week. By way of reminder, it's £25 into three portfolios. 25 into the Battle Royale, the portfolio where you tell me what to invest in. 25 into the benchmark, where we compare the Battle Royale to an all-world index. And finally, £25 into the income generator, where we try and make some money to pay out in prizes. Let's get on with it.
Here's how our portfolios have performed over the last 7 days. I thought it was an interesting one. The benchmark this week was up 0.9%, but being absolutely battered by the Battle Royale that was up 6.7%. Both doing far better than last week. The benchmark was down 0.2% last week, whilst the Battle Royale was up 1.1%. However, both this week beating the UK market, which was only up 0.3%. How did the Battle Royale perform so well over the last 7 days? Well, here's the biggest movers, and look at that right at the top on the beach, up a massive 40%. That is crazy. That took two big jumps on positive earnings, making Tesla look pathetic with a mere 12.8% rise. Adidas out of nowhere jumping up 8.3%, and our big losers this week were Tate & Lyle losing 3.8%, and Nichols, although it's been rising a lot, down to 3.1%, sorry, down by 3.1%. That makes a big difference. Here's how the income generator's done with its Vanguard FTSE high dividend yield portfolio. It's had a bad week, down 0.47. However, the dividends are now up to 9.78, and next payment 1.92, followed by 1.74 before we pay that out to you. That's a whopping £3.66 that's going to get paid out, up from £3.39 last week. And finally, how are we looking overall time? I'm super happy with this. The benchmark ticking over at 5% increase. It's made us £16 after having invested £325. But massively, the Battle Royale so far, and I will fully admit this is all down to luck, is up 13.89%. Thank you On the Beach, Tesla, and Nichols, and no thanks to the likes of B&M that has just plummeted. But all going very well, all a lot of fun, and an extra £44 from the Battle Royale.
3, 2, 1, fight.
I love Spotify. It's one of my favorite apps in the world. I would choose it before my Netflix, Disney, even before Amazon and its next day deliveries. I listen to music, podcasts, audiobooks. I listen to it whilst walking the dogs, commuting on the train, or even just when I want to listen to music and get in the zone. I'm definitely a loyal fan, if you can even say that, definitely a customer. Every month I'm desperate to give these guys money to keep going. And if I just take myself and nobody else as an example, that's got to be the sign for a good company, and definitely worth a look into the stock. Shopify, on the other hand, I've heard so much about, especially recently with its stock success. But if I was starting a new business, it's definitely the app I would go to. Basically, you go online, you make your little market store up there, and people can sign in and buy things from you, and they make it very, very easy. It's definitely the way of the future, and because of my interest in it, I think it's worth taking a look at the stock. I think both Spotify and Shopify have massive scope for growth in the future, and I can't wait to see what they both get up to. Our first stock to take a look at is Spotify. According to Simply Wall Street, it's trading at 6.7% below their estimate of its fair value, and its earnings are forecast to grow at a whopping 30%. Its future is tremendous, according to this snowflake. Not too much of a past to speak of, however, it's a relatively new company, so that's not too much to worry about, and it's not particularly well priced at the moment. It's a little bit expensive. However, it is a healthy company and there's no major risks to worry about. I did want to quickly show you its stock chart over the last year, 3 years. It's just gone in one direction, and that is up. 5 years shows a little bit of how it became popular in about 2001 and then dropped off, but if we look at all time, we're back to performing very, very strongly. Perhaps overvalued or perhaps going from strength to strength. It's up to you to decide. Undervalued, apparently, although, as I say, not necessarily cheap. And the other thing I wanted to quickly show you is how it makes its money. And that's quite interesting, being a new technology stock. So here we have all the expenses, including general admin, R&D, sales and marketing, and its profits are particularly generated from the subscriptions. There's not a huge amount else other than that. Some coming from ads, of course. So that's how it makes its money. It does not pay a dividend. However, one thing to bear in mind a little bit is that buyback yield is negative, which we don't like to see. It means it's giving away shares, but at 0.8%, I don't believe that's too much to worry about. All in all, a typical US technology stock, but I do love Spotify, as you may gather, and I think it will go from strength to strength. Our second company is Shopify, and Simply Wall Street thinks its earnings are going to grow at 18% per year, which is pretty impressive, especially considering it only became profitable this year. No major issues to worry about under the risk analysis. And if you have a look at the snowflake, it also has a fantastic future forecast. Not much past to speak of, but as it's a new company, that's nothing to worry about too much. And apparently it's a pretty healthy company, which is great because Warren Buffett would always want us to protect our wealth first. My only major concern is that it is not well valued. It is an expensive company. And now I know I said that about Spotify, but this is why I'm worried. Over the last year, it was pootling on at about also around the $80 mark. However, in mid-November, that jumped up and it's now trading at $118, which is quite rich. And if it rolls back, we could lose a little bit of money, at least in the short term. However, and if you have a look, it's happened before. But as I was saying, I do like this stock. I believe in the company, and as business and commerce continue to improve, hopefully, it may make up for it in the long run. There it is, a little bit overvalued. We should look at the debt levels, because although it's healthy, we want to make sure that it's not going to sustain any major shocks anytime soon. Also, it doesn't pay a dividend, but it has got much less of a negative buyback yield to worry about, so it's a relatively sturdy company as well. So they're pretty similar. It's going to come down to personal preference. Dig into how the companies themselves work, what you think of the future, what you think of their debt and finance. Take a look at what their ownerships do, whether you like the management, and then let's try and make a decision.
Now that that's out the way, let's take a look at and compare their high-level metrics.
Both of these are very big companies worth 97 billion euro and 152 billion euro respectively for Spotify and Shopify. They both have monstrous PE ratios, 134 for Spotify and 110 for Shopify. Shopify was the one I was worried about having gone up, but it's actually got less of a lower PE ratio to Spotify. So that was a bit of a surprise to me. Spotify's earnings per share also being negative was very interesting. So when I started this, I thought Spotify was the far out winner. However, Shopify not that far behind in this occasion. Not much else to say here aside from the fact that Shopify has a much larger beta and is therefore more volatile, but if we're going to hold this for a long time, that doesn't matter too much. It's also got a much higher volume to Spotify and brings in slightly lower revenue. So it is really up in the air between these two. Let's see who is going to vote and win the highest votes that we can invest in that company.
So there you have it. Who do you think we should invest in? I think it's got to be... Do you agree? I'd love to hear from you either way. Let me know in the comments. And if I've missed any S stocks that you think I should have taken a look at, please do let me know. Otherwise, thank you for joining me for another week, and I look forward to seeing you next week.
Goodbye.